Hello guys, welcome to March 31st, the last day of March. So what is kicking off April? So what should we invest? What's the point of view in short term, in long term? So I will introduce one of my best friend, US dollar currency, US dollar index. That is the key for you to really analyze and understand the main direction of your investment and assets, the direction where they're going. So I'll review in the past 3 weeks, 2 weeks, or even ever since the first video I've published, I've always talk about and been using the same technique to analyze the US dollar. If you have been following me, I've already told you guys the upper limit is the lower limit is 99. So when it hit 102, you can have a bullish. You can be bearish on the US dollar, and until it hits 99, you can be bullish again. So why should you be guessing the US dollar index? Because there's nothing as efficient as effective of spending your time of studying it, but you can get the most of it. That is the US dollar currency, because majority of the commodities in the world, around the world, is priced in USD, and almost, I should say, all the currencies in the world is against USD. And USD, because of that, the currency will be moved because of USD, and the money will be flowing and leaving all other countries only because of USD. So the mentality, the valuation, the money, the cash flow within each country is most likely will be affected by USD. So if it goes down, you can buy gold, you can buy euro, you can buy Australian dollars, you can buy Chinese banking, you can buy Taiwanese insurance stocks, stuff like that. Okay, you can, if we rebound it, you can stop buying gold, you can buy indices, you can buy stocks, stuff like that. Okay, and you can short gold, short gold or short silver. So after understanding the trend of US dollar, that's really important. So let's see. If you have been following my advice, I've been talking gold since day one. Not that I'm big believer in gold, but that's the correlation between gold and interest rate is pretty high, because I have another video about that. But yeah, other than that, it's because USD is really fluctuated recently in these few months. So you see, gold is going up like hell. So euro is going up like crazy also. So because we know that the USD is going to go down. So I'll review the channel. So there's a specifically how you should construct a channel. If not, you are only seeing a channel that only you can see. So in the end, that is losing money. That's the end of the story. So if you draw something that the whole market can see and will highly likely to look at, most likely will look at the same channel. So you see, ever since day one of my video, I've talked about this USD channel. So up, down, down, up, down. It's always about the channel. The range is exactly the same. If I move the trend to this, to up here, it's exactly the same width. See? And you see the peak, okay? That's really amazing, because not really likely, not really always happening that something is really down to exact and perfect, okay? So you see, when it hits above this channel to 102, I told you the timing is a couple of days before the Fed decision, which is March 15th, because first of all, it hit the the upper limit of the channel. So technically, the downside risk is higher. Secondly, I have recorded another video. I said I doubt that the U.S. Fed will have anything saying there will be something like promising a even stronger, faster pace of interest rate hike. So with that being said, this wave is the market has 100% anticipation that Fed was going to raise interest rate for one time. If the result is matched matches the expectation, that means the US dollar will experience a higher chance of going down instead of up. So when there's more room for USD to go down and less room to go strong, that's it. You know all the trends. You know gold will go up, Australian dollars will go up, euro will go up, and silver will go up, and stuff like that. Okay, so you know the trend. Now I told you that most likely it won't stop in the middle of the channel like last time, because it is really coincident that fundamental and matches technically those two main forces driving together the USD, driving it to go weak. So I think I've told you specifically in the last video that 99 is my expected level. When it hits 99, you can turn all your short-term portfolio or your approach in the opposite way. So you should sell your gold, you should sell your euro, you should long, be bullish of the US dollar, and you can start buying your house, you can stop negotiating your house, you can come back to US and buy some stocks, especially banking, insurance, and housing, property stocks. So now, did you do that? The earliest day is 27th, this candlestick. The latest should be 28th, because I told you exactly the level. That's how I roll. That's how I see things. So US dollar is pretty easy to guess, to anticipate. So you see, when you buy gold before the 15th, which is this big, long, bullish candlestick, you should be buying at around 1197, I would say 1200, and 28th, I assume that you're not that flexible enough to sell, to take profit of gold. 28th is last day, is 1250, okay, $50, bam, just in your pocket. So euro, it's the same. See? Here, 14 to here, 28 here. It's almost 5% raise for a currency. 5%. I'm not talking about leverage. I'm just saying purely going to bank and exchange some euro into your pocket. It's just 5%. Maybe you're not for investment. Maybe it's for traveling. That's okay. For traveling now, you will know what to look after for in order to you to get the most out of the currency exchange, and you can buy a little bit more during your travel. Okay, it's everything. Looking at the US dollar is everything. It's travel, it's your life, it's your planning, and also you can plan to buy your house. So let's say US dollar is going weak, then the housing market will be going down, the money is leaving US, the stock market will be adjusting. So you know the seller, the owner will understand that now you have more room, more power, the game theory, you have more something on your hand that you can negotiate the price down a little bit more. You have more room to negotiate. But when it rebounded, and you know when it will rebound, is because it's exactly at this purple line here. So another thing is head and shoulder. You can draw a line here, right? Two lines, one big dot, one big intersection, and it rebounded, boom, just go right up. So now you know the money is going back to US, the stock will going up, people will be more optimistic. That means if you want to buy a house, there's less room for you to negotiate. So just buy it now. So if you're a seller, it's the other way around. Of course, you say, oh, buying a house is speculation, right? Majority of my wealth, I would say all of my wealth is for investment approach. So I will something stuck in my head. So for doing investment or anything that worth my time in studying, is that I should eat a steak, not peanuts. So that's how I roll. So that's how I spend my time. I spend my time on studying on those for that the most effective and most efficient, giving most leverage on studying other assets. So but in terms of short term, in terms of long term, buying a house is, I've talked about the interest rate cycle. I'll tell you why even US is going to have 7 times of interest rate hike. The housing market will hit historic high again, and 3 signals about the properties. You can go back and check out those videos. That is the reason why you should buy a house But when you should kick into the housing market, you can look at the US dollar, right? That's no harm. You don't have to pay in order to fix this website, right? So I guess that's no harm, okay, at all. If you want to sell your house, that's really stupid to do. Look at all my other videos. I would say that the bubble, either there's no bubble or the bubble is really still insignificant for it to burst. For it to be significant, I've told you the few reasons and what to wait for it, but now there's no bubble at all. So that is basically why I look at the US dollar. So it may hit the middle of the channel and come back down. That's 101. If it stays above, then the other target is 102 to even 103. So now, not the time to buy gold. Even you can have a short position on gold or silver, but it's time to buy stocks. So let's say, if you talk about that, I rarely talk about stocks, right? But I talk about two stocks. One is Amazon, will be the next 10 years is Amazon's kingdom, and the other is Facebook, right? I'm not used to think of Facebook as a steady and promising stock. But now I think it's pretty good. So because of the video I talked to you guys, so Amazon, I bought some 2 days ago, no, on 28th. So is Amazon hitting historic high? What about Facebook? Historic high. The worst one is Home Depot, right? It's not actually as bad. So stock selections is another thing to do. So if you have no time to do the studying, I can obviously hold some live section or webinars, something like that. If you have no time to learn, you can always follow my videos. I can tell you whatever I'm doing now, because I'm not believing the housing market and the stock market, or in general, is a zero-sum market. I don't believe that. I believe in win-win situations. So if I'm playing futures or options with you, I won't teach you future options, because that's zero-sum game. Okay, all right. So with that being said, again, look at the USD level. So now I guess it's pretty good. But okay, the US indices is accumulating another bigger adjustment coming up. Okay, I'm not saying bear market, I said bigger adjustment. So that is good news. If until that level you keep watching my videos, I will tell you when you should take profit. Hopefully we have cash remain, so that when it adjusts pretty seriously, we can have a chance to buy low, hopefully sell high. But if that's the bear market, for you to hold cash, why should you kick it back into the market? That's stupid, right? Because people say it's bear market, it's bubble, then why should you even care about the market right now? Okay? No, right? So hopefully, anyway, so if you believe my movement, I know my English is not perfect, but one thing I know, I should use this language to develop one and only one common language in the world among all of us is investment. I know majority of the US and Canada and the Australia, less from UK, right? So hopefully you can smash the like button and share to your friends if you think my videos added positive value to you guys and resonate some of your process of when you losing money within your experience that resonates you. Hopefully you can subscribe and make sure you hit the notification button, so when I have new videos published, you're one of the first one to see it. So with that being said, before next Monday, I will talk about, I have an animation video about bull and bear market. That is really the first question you should ask yourself before you invest in anything. Because if you understand the market is really spontaneous, right? But there's one thing that is consistent, is bull market, bear market, bull market, and then bear market. It's 200 years like that, okay? So that's the only key for you. If you understand that clearly, you won't be losing that much. That means the profit and losing profit and loss margin will be higher, so the chance will be higher for you to profit. So you can schedule your stuff. You can use you do that to schedule everything. Of course, the US dollar is as important in shorter terms. So with that being said, have a good weekend. Until next time, I will see you then. On Monday is animation time. So I will see you next time. Hopefully you can leave me comments. I reply each of them. So many of the topics are from you guys, many suggestions from you guys. If you do anything that you don't understand, please ask me. I will tell you. So that is the key. I think the last phase of the bull market is US stock for sure. It's most promising and consistent. Okay, so I think it's pretty hard for you to hear because every single people who ever live in whichever country, they will tend to think of the bad side. Okay, but seriously, I told people in Malaysia, students in Hong Kong, I asked them the U.S. may not outperform, but may be the most consistent and promising because the interest rate hike happens in U.S., not other countries, right? So we should take advantage. So they say that, oh, even I do bad in Hong Kong stocks and Malaysian stocks, I have no time to take care of the US stocks. For you guys, it's the same. I ask you guys to learn more in case US hasn't and can't promise that US will be the best from now and forever, right? So we really have to understand the world. As long as there's something happening, we can invest in. We shouldn't limit it by our citizenship because I'm US citizen. I invest in US stocks. I'm Hong Kong citizen. I only invest in Hong Kong stocks. That's wrong. So right now, it's lucky enough it's US. So and Germany in my sense. But next time, I'm not sure, right? So please follow my videos. I will see you Monday. Hopefully something for you to reflect in the weekend. I'll see you. Bye-bye.